Hi everyone, this is Doug Brennicke. Today we're going to try to define Freddie Mac and Fannie Mae and also let you know how conventional FHA and VA loans fit into the picture. Freddie Mac and Fannie Mae are government-sponsored enterprises. In a sense, they're private corporations that have government backing. They are the two biggest entities responsible for the mortgage business. What happens is that they create guidelines and create a market for all of the loans that are created by banks, savings and loans, and credit unions, so that once the banks and savings and loans and credit unions create the loans, they have a place where they can sell them. So the loans get created locally, they get sold to Freddie Mac and Fannie Mae. The lender gets the money right back to re-lend again, all over again. So it creates liquidity in the marketplace, and also Freddie Mac and Fannie Mae have created a standard for underwriting loans that all conventional lenders, those are the ones that I just mentioned, savings and loans, banks, credit unions, have a standard to which they create the loans so that everybody has a pretty good idea of what to expect when they get a conventional loan. FHA loans are ones that are created and are actually insured by the federal government. The FHA program creates an insurance pool that is funded primarily by money that gets deposited by the borrowers in the form of mortgage insurance, so that when FHA experiences any losses on loans or on groups of loans, they have a fund that they can go to offset the majority of those losses. However, once again, the government is there as a backstop in that particular program, so that if the losses are excessive and that insurance pool is not large enough, the government has insured those loans to the lender. One of the major features of an FHA loan is that you can get in with very little down payment. Usually 3.5% is the standard, as compared to conventional loans, which typically have an industry standard of about 20% down. VA loans are loans that are guaranteed by the government, and they're available to eligible veterans. An eligible veteran is one whose length of service has put them in a position to receive the VA benefit. One of the major features of a VA loan is that they can receive 100% financing to a qualified veteran and maybe their spouse and for their family on an owner-occupied dwelling. But the major thing to consider here is that VA has a program where the loans are guaranteed by the government. FHA has a program where the loans are insured by an insurance pool and insured by the government as well. And conventional loans are more private enterprise, if you will, with the ability to sell those loans off to the government entities of Freddie Mac and Fannie Mae. So hopefully that helps create some clarification for you, and we're going to move on to another lesson here in a little bit. Thank you.